Hello, entrepreneurs. Joe DeCharis, CPA extraordinaire, coming to you live from downtown Bethpage, Long Island, New York, for another amazing episode of How to Win at Business. And if you're watching live, please give me a hashtag live. If you're watching the replay, give me a hashtag replay. And if you have any questions or comments, please feel free to put them in the chat, even if it's a replay, because what happens is I do get the uh, the notification that there's a comment, and if you put your hashtag in the chat, you will also get a response. So if you're interested in this topic, which I believe tens of millions of people are or should be or will be in the future, we're going to talk about how to get an IRS, not just the IRS, but also state and local tax penalties abated. But before I do that, let me invite you to a chat with me. All you got to do is go to timewithjoe.com. If you have a business question, you're in a pickle with taxes, you got to anything you want to talk about business related, please feel free to treat yourself to a free 20-minute one-on-one chat with me. I love talking about business. Most of all, I love solving problems, especially when it has to do with the IRS, because a lot of people cringe when they hear IRS, and maybe because I've been doing this for so long, and I've gone up against them so many times, and I've won so many times that it's a challenge. It's a challenge that I live for, to uh, go against them, against their own rules and regulations, and prove them wrong time and time again, and help clients overcome the adversity, the fear and anxiety of having to deal with an out of control government. And like I said, it's not just the IRS, folks. It's the state and local governments too. They're making it uh, difficult, if not impossible, for a small business to start, grow, and manage their own business successfully. So here at Bedrock, we strive to make things simple, affordable, and easy to overcome. Okay, and so today is another in a series of dealing with different types of IRS notices. In the first two parts, what we spoke about were, the uh, really, we focused on the letters that recently the IRS said they're not going to be sending until they catch up with the 7 million returns that they still haven't processed from last year. And I was saying from the get-go, I said, how come they're delaying all of the refunds and blaming it basically on COVID? Not basically, they were flat out saying, because of COVID, we can't process these returns, blah, blah, blah. But the penalty notices never stopped. Explain that one to me. Explain why the machine was still running, the printing presses were still sending out letters, even though the post office was decimated. So the IRS is sending out notices that may or may not have even reached you. And then lo and behold, you get, hey, you didn't answer the first two notices, so now we're gonna attach your bank account. And most of the time, the IRS sends a letter that says that you owe money when you don't. When you don't, they presume that you owe the money. They're not going to send a letter saying, "Hey, we need more information." Uh, Actually, what they will say is, "Hey, we need more information, and unless you give it to us, this is the amount you owe." What you actually get is something that looks like a bill, and they all say "pay by blah 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 date," and people freak out, and I understand that. Now, I've answered probably tens of millions, not millions, tens of thousands of IRS letters and state and local governments. I used to have to put aside at least a day every month just to answer notices. That's how bad it got. So now what I did was I got into a routine where I designed templates because I realized I say a lot of these notices are the same notices. They're just a different date, different taxpayer, same circumstances. We didn't, you didn't file a return, blah, blah, blah. Here's a penalty. You didn't pay us. Here's a penalty. Uh, Whatever. There's a penalty. There's a penalty for this. There's a penalty for not paying the penalty. Well, a long time ago, I came across this term called reasonable cause. So let's say you were late, just for argument's sake, you were late on filing a return, or you gave it to your accountant to file and it never got filed. Or you did file it and the post office never delivered it. I've had clients that even sent it with the return receipt. We get the return receipt. And guess what? It doesn't even matter. All that matters is that helps you with your case that you mailed the return. For the IRS could say, how do we know you didn't mail an empty envelope? Okay, that's the response that I've gotten. How do we know you didn't mail an empty envelope? And this is not the topic on this, but it's another way the IRS harasses people with the auto expenses, with the mileage logs. Okay, I've had clients with detailed auto logs that said exactly they did it to the T. I mean, they were obsessive about it, the date, who they met, how many miles it was, why they met. And this didn't happen once, this happened several times where the agent would go through it and say, well, you took 80%, we'll give you 40. And I would be in shock at the time. And each time they said, well, how do we know you actually met for business? I'm staring now because I was speechless, and I'm not speechless that many times. Like, what do you mean? How do you know they didn't meet? Because we said we did. Because we said we did. That's how you know we met for business. So these are the kinds of issues that people that are willing to go up against the IRS face. I had just finished two audits last year. I talk about this a lot, where the IRS claimed that none of the deductions were business related. So one of them was a trucking company where the individual, our client, and they got audited. They came to us after, they were audited. It was a sticky situation. The IRS said that they owed them $250,000 because they said the $250,000 that you paid to your drivers, it was a trucking business. They said, well, that wasn't business related. The $80,000 you paid for insurance wasn't business related. The $50,000 that you paid for gas wasn't business related. So they just disallowed all of their expenses. And they get away with this a lot because people don't know what to do. They just don't know what to do. So it was easy for me. I said, under Section 162, which is where the IRS says if a deduction is ordinary and necessary, it's deductible. So when an agent says something like, how do I know you didn't talk about sports? Well, that's not for the agent to decide. That's not and people don't realize that just because the IRS says something does not make it right. It does not make it correct. Believe it or not, they are not the last say. They don't have the last say. And I do have somebody that posted a comment here. Let's see. Hey, Kelly, thank you. Kelly Thomas, CPA. I'll tell you what he said here. I really appreciate that coming from another CPA. We CPAs, we got to stick together because the government is out of control. They've passed way too many laws just recently with all kinds of initials, the CARES Act, the FACTA Act. And the only way to keep up with this is to network and discuss these issues inside our groups, whether it's LinkedIn, Facebook. I found it extremely, extremely helpful. So let's talk about the penalty abatement strategy. So when clients get a penalty, like I said, if it's for, let's say it's for a late filed return or an unfiled return, or you whatever you get penalties for, okay? If you have what they call reasonable cause, you can get the penalty abated. Okay, now the way that you word the letter makes all the difference. You have to, and that goes with any business letter. You want to get, just like when you do a resume, you don't want a 5-page resume. You want to get right to the point. You want to give it in the perspective of the person that's reading the letter. So in my experience, when you give the IRS exactly what the issue is, what the penalty is, how much it is, don't assume that they know. You got to make it easy for them. This is in response to your letter dated blah blah blah, where you where you assessed a penalty in the amount of blah 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 plus applicable interest of blah blah blah. Okay, we are writing to respectfully request an abatement of the penalty in full plus the applicable interest. So in the first, couple of sentences, they know, oh, they're looking to get the penalty removed. They know right away what the letter's about. In the heading, and I'm going to show this to you. So this is how you have to have it formatted. Okay, you put in the top left, and this is how I do it. In the top left hand corner, I put down who it's to. Okay, let me just make this bigger. Who it's to, the date, obviously, you want to date everything. This came from me. It can come from you, and I'll tell you what the difference is. And then regarding, this is where you put all the key information. Penalty abatement request, form number, that's used, because they don't assume that they're going to know exactly what, even if you give them the backup, then you're putting something in their hands. You want to make it crystal clear. You want it so if a 5-year-old, I don't even know if 5-year-olds could read yet. I think so. They could probably read it too now. Anyway, you want it so and any individual can understand what you're talking about here. So I always address it, dear sir and madam. You want to be respectful. I tell them who I am. Okay, if you're not the accountant, you tell them who you are. I am, and now this has become a big one with them. If you don't have a power of attorney, the IRS isn't doing it that much. The state governments are coming back saying, "Oh, you don't have the authority to respond to this." And to me, that's just a delay tactic. Because for years, for decades, I wrote letters on behalf of my clients and they were answered. Now, I'm in New York State, so a lot of my clients that are from New York State, that's New York State's tactic. They say, "Oh, you don't have the authority." Well, you don't have to answer me. You can answer the taxpayer and say, "We received a letter from your accountant stating blah, blah, blah." Okay. So now they've come up with, well, we can't talk to your account. Well, I'm not actually talking to them and giving them information, which is a whole different subject. But that being said, there's nothing that I can do or you can do about how the government administers the tax law. So we're on to so in this letter, and now I know, I usually get a power of attorney when I file the returns now. because I'm like, you know what? If this is how they're gonna do things, I'm gonna be one step ahead of them. So there's a box on the tax return that says you authorize this third party to speak on your behalf. So if a year from now they say, whatever, that you didn't file the return, that's a very common one. They didn't receive your return. Okay. Uh, I am writing to request, and that's what I said. So now we get into the facts. Okay. In this case, it was the former CPA that was responsible for filing the return electronically. Now, this happens more than you would think, because it's happened to me where I've, submitted a return electronically. It says, accepted, and sometimes it's not actually accepted. What I learned is it actually gets accepted by my software company. So they've taken it in, and I assumed incorrectly that it was actually filed with the IRS. So this happened years ago. Uh, and a couple of times it got stuck. It got stuck in between my software company and the IRS. So later, we figured out a better way to double check if it was actually accepted. So in that case, and it looks like in this case, the return was not received by the IRS. So now this is where what they call reasonable cause comes in. So I'm gonna get rid of that. So reasonable cause is what it says. There was a reason why it didn't get filed. Now there's a couple of instances that the IRS, they're like catchphrases. If there was a medical reason, somebody, God forbid, had a heart attack. If there was a natural disaster like COVID, we've been blaming a lot of stuff on COVID. Uh, if there was something beyond your control, a flood in the basement destroyed all my records. Your accountant was not available. Your accountant moved to another country. We can't get a hold of him. Or this is one that we use all the time, especially when I get a new client that got a penalty from something that the old accountant shouldn't have done or did wrong. So what we say is, in this letter, we said the CPA was responsible. So if you rely on a professional, one other thing, that this is one that I've never used. If you've gotten advice from the IRS uh, that was erroneous, that's reasonable cause. Now I've never seen them give anybody in writing. Not that it doesn't happen, but they're careful now to not give out erroneous advice. But the most prevalent one is when it was because of the accountant. Now, I'm an accountant. Kelly's an accountant. We all make mistakes. Okay. Some of them aren't so bad. Some of them I've seen from other accountants are gross negligence. I mean, I've seen other accountants do things where they should have been arrested, to be honest with you. So nobody's perfect. So in this case, I took an example of somebody's return that didn't get filed. Okay, so now it the reason isn't that important. What in this case, the reason is the taxpayer gave the return to the accountant. The accountant is a professional, authorized to submit tax returns to the government. As far as they knew, the return was filed. Okay. So they relied on a professional. Then you tell them whatever. So there's reasonable cause, and there's under the law that you were not negligent. Okay. You did not do this on purpose. So you want to state that there's reasonable cause. Give them the reason. This is what happened. My accountant was sick during COVID. We sent him the stuff and we couldn't get it back. Uh, my, my family member had to get rushed to the hospital and we brought all the paperwork. It was in the trunk and the car got stolen. Something happened that you can back up with facts. So I always end it with the taxpayer, or you could say you did not act in a willfully negligent manner. Also, it helps if you say, this has never really happened to us before. This is a one-time thing, because you can't, you know, every year have a return that's filed late. After a while, it's a pattern. It's not a mistake. You didn't rely on a professional. It's just that you're late. Okay. So what happens with this is you mail it in, and under normal circumstances, in 6 to 8 weeks, you'll get a response saying, okay, we adjusted your return, we removed the penalty. That happens, I'd say, about 80% of the time. I'm successful. And you got to remember, a lot of time it's probably more like 90 or above, because I'm not going to send a letter unless there actually is reasonable cause. It's like, when they say prosecutors, won 100% of their cases. Well, they're only going to trial on cases that they know they can win. So now here's one for an S corp. So if you have a time limit on when you could file to to be treated as an S corp. Now, if somebody comes to us and they never filed, there's certain circumstances that the IRS specifically allows a late filing for an S corp or for an LLC that wants to be treated as a corp. So there's language that goes right on the forms that the IRS recognizes, and when you do that, it's 100%. Okay, and but this one was one where we actually sent the form, the 2553, and the IRS says they never got it. What I do now is I fax those myself, because I get a confirmation that the fax was sent and received. Now, this is one that I did with the state. So the state imposed a penalty on my client, uh, and you could say I blamed it on COVID-19, and I gave them a bunch of facts. And the concept is that we made a mistake. We're sorry. It won't happen again. We have reasonable cause. Please abate the penalty. We submit this respectfully, make it short and sweet, and then wait for a response. Now, sometimes they'll say, and this has happened a bunch of times, that they need more time. They need more time. So now, unfortunately, if you're not successful, the interest and penalties still accrue, and you could pay to stop that, but then getting the money back is a whole nother process. And we've done that. There's forms to request a refund of a penalty that was paid. One time it took years. It took us years. It was over $20,000, but we did get the money back. What was interesting in that case, it was three corporations that were filed late. They all went to different uh, examiners. Two of them accepted the reason, the third didn't. So I appealed it, and I said, well, that's funny, because it's the same facts and circumstances in the other two, and you accepted those. So on appeal, they accepted it. So, if you get a letter, don't pay it. Don't pay it if you think there's a chance that you don't owe it, or that there is what they call reasonable cause. So that's my story. I'm sticking with it. Like I said, if you have a penalty notice, you need some quick pointers, feel free to book a chat with me, Time with Joe. Also, I'd like to invite you to our weekly mastermind. You just go to Mastermind with Joe, And we talk about things like this. We play games, we give prizes, we have fun, believe it or not. Yes, we can make accounting fun for people. And that's my story. I'm sticking with it. God bless. And I will see you.